Welcome to the Loveland Report and Lone Ranger Show. I am Cleve Loveland, Central Florida's best real estate planner, bringing you the real estate and mortgage news for over 27 years on this station. Thanks for tuning in. Me and the Lone Ranger
That's me.
are going to give you all of what's really going on in real estate and mortgage. I got some great stuff today. Numbers finally came in. The market went to sleep, or the board got hacked by the Russians last month, and we have no numbers for March. But April's numbers finally came in, so I've got that to go over.
How could there be no numbers for March?
I don't know.
Ridiculous.
They obviously it was a glitch. I don't know. Ask.
Either way, March wasn't, and as far as I'm concerned, March wasn't bad.
Well, I know the sales were up. I just didn't have the inventory. But the time on the market, all these numbers I've got for April and for where we're at this year to date, are we bottomed out? I think this, we're talking about this has been a Sleepy Joe hangover economy and real estate. What's been going on? Are we bottomed out? And how many properties should you have if you want to retire wealthy? We're going to talk about that and investments. And we got a Leapfrog seminar we're going to tell you about. What do you got going on, Bruce?
Well, I can tell you that I don't know if the market is bottomed out, but I see that we have shifted so much now into more of a balanced or buyer's market that I am starting to see buyers have a lot more opportunities than they've had in the past. And a lot of people really saw that, they see the market as slowed down a little bit as being a problem. I see it as being an opportunity. I think a lot more buyers are finally getting off their butt and getting out there and buying properties. I'm even seeing people that were the move-up buyers that wanted to move up to a bigger home, to a better home, maybe grew, their family expanded, and now they see the opportunity to do so. If you're a seller, you got a lot more competition. There's a lot more inventory out there. And rates have not risen. They've really stayed relatively stable. They're staying under 7%.
Yep.
Okay. They're not dropping like we would have hoped they would, but they're not.
That's still
up.
The best rates in about 3 years almost.
Well,
we had one blip where it lowered.
It's a little better than we were last year. But, I think people have finally come to the realization that we're probably not going to see 4s and 5s again. And if we do drop to the 5s, well, we'll certainly let you know. But at this point, I think that this is an opportunity because you can actually choose from a multiple of properties. And if there's that many properties available on the market, then why don't you jump in and negotiate a deal right now? Because if rates were 5, you're not going to have that opportunity. There's going to be too many people looking to purchase in the market. And right now, buyers are in control. So if you don't take advantage of the way the market is right now, you probably will never take advantage of it, or you'll be one of those people that goes, yeah, I have a little regret. I should have probably bought when the opportunity was right. Now's the opportunity.
On these numbers, Bruce, that I got, I want to talk about inventory first. This is the important one. It tells us whether we're 6 months supply or less, seller's market.
Okay.
7 months supply or more, buyer's market. And this is what's funny. And this is why I have a job. I go break this down for people on their basis, what's around them in their neighborhood, what's within a couple miles of them. But we were at a 7-month supply 2 months ago, back in February.
So
glitch
a little bit on the buyer side,
a little bit. And it depends on where you're at. But then April and nothing really great happened besides spring buying. March was a good month and still behind last year's sales. Inventory dropped to a 5.5-month supply.
So
shifted a month and a half right there.
Back to a seller's
So imagine
market.
If rates, when they do straighten themselves out, which I think we're probably 6-12 months,
significantly,
we're going to be back into where you're mostly multiple offers. I had a multiple offer situation, one of my buyers on a piece of vacant land, and that hasn't happened to me in 3 years.
It all depends on where that house is, because when we say it's a buyer's market, it doesn't mean it's a buyer's market everywhere.
Yeah.
You're not going to go into Lake Nona.
Well, it depends on what you are.
Listings in a neighborhood and think that you're going to negotiate 30% off your sales
One of my
price.
listings I put on, it was funny because everybody was asking $599. All those homes were about 2,500 square feet with a pool. Well, one of my sellers, 2,800 square feet with a pool, same kind of great condition, A-, not brand new, but great home. We went on at $599, gone, multiple offers. What are those people doing that were 2,500 square feet? They're still sitting there at $599. So buyers are not stupid. They're going to pick the best value. And we still got very close to list price, not like 98%, 98.5%. And after repairs, we gave them some little credits. But it's about knowing the market absorption, knowing the market. And when the realtor doesn't come into you with a market analysis and show you the last couple sales, you can't just click on a website and say, well, this site says this, because that site fluctuates up and down every week. It doesn't know that you just spent 100 grand on your swimming pool 3 years ago.
No.
It doesn't know that you just redid the kitchen for 50 grand. It doesn't know that those
But if
last
you
3
redo
sales.
a kitchen for $50,000, how much of that do you really think is going to increase the value of your property?
Well, it's probably only about half that, but
If
it
that.
depends on the age of the neighborhood.
It also
Depends on
depends on what the other comparables are coming in at.
Yep.
Because
How
if
many
you
are on the market?
spent 50 grand on a kitchen and yet your house is still, it's not going to be worth even 25 grand more than what the comparables are going to bring in.
But I think if we see rates below 6.5 as we go into summer, we're in May. I'm already writing contracts for
You're
June.
going to reduce the inventory.
Inventory is going to go
to a
down
seller's
more. We're going to be
market
back
again.
into this. And you know what I'm seeing, Bruce? I got a lot of $1 million sellers going on the market. A couple downsizes, a couple
Interesting.
upsizes. And those are, what's funny is they are in their market. When I look at their other competition from 800 to 1.2 million in this zip code they're in or around them for a couple of miles, they're in a seller's market. They don't have 50 competitors.
And you know who's buying them? Mostly people with cash. There are a lot of cash buyers. When you get above that $1 million price point, cash is the big deal.
I don't care who they are as long as they get us a good price. If they
Well,
got cash or the mortgage, yeah.
I'm just saying that's a very common when you get into the $3-4 million price point. Very few
20 years ago, $1 million.
mortgages.
20 years ago, $1 million was a lakefront, chain of lakes,
for sure.
5,000 square footer, 4,000 square footer. These are homes that are just interior, nice neighborhoods, half-acre lots with 4,000 square feet or 3,500 square feet. Well done.
One of my good friends just got $1.6 million for his house in Lake Mary. And it was a cash buyer, and he had 3 people wanting to buy it.
Yeah.
And it's in a neighborhood.
But Central Florida, we are moving well. The time on the market actually dropped, Bruce. It was pushing near 80 days. It's down to 70. And this is the average of all the listings in Orange, Osceola, Seminole, and Lake. So it's a big conglomerate of those 4 counties. But this is something you've got to know when you're thinking about going on the market. But it's about your plan. What's the right time?
Yes.
I just had a gentleman talking about not selling his rental, but it's really long in the tooth. It needs a major renovation. And I said, look, the builders are dealing right now. You can get 5%. They'll pay your closing costs.
Sure.
What your builder Trinity. I mean, there's all kinds of options out there. I've made some great deals with some new construction lately, especially if you're cash, then they don't have to give you closing costs. They're really dealing on their prices. And there's some great time. I said, a year from now, I said, we might not be in that environment, and your home is really, really dated. Let's get somebody into it now. I don't want you to spend 20 grand to rehab it. I want you to spend 5 grand for paint and carpet.
Yes.
And that's the kind of thing I advise people on. So if you need to reach me, call me at 407-352-8118. I'll help you make your real estate plan, whether you're buying or selling or investing. I can help you with that, or go to cleveloveland.com.
Yeah, or call the loan arranger and get your mortgage started. I've been in the mortgage business for 35 years. I've closed tens of thousands of transactions. I'm right here in your backyard. Cross Country Mortgage has every loan program you could possibly think of, and probably a bunch you never even heard of, including reverse mortgages, reverse second mortgages, home equity lines of credit, construction loans, renovation loans, doctor loans, self-employed, no tax return loans, DSCRs for investors, you name it. We got it. It's all done in-house. And you know that Cross Country services 90% of the loans that we close. So you don't have to worry about your loan being sold to some other strange company that you don't even know who it is. Cross Country Mortgage right here. Bruce Woodburn, the loan arranger, 407-250-9144. That's 407-250-9144, or webringyouhome.com. Cleve, we're going to be teaching one of our wealth building Leapfrog class for June the 18th in Winter Park, Florida. So you'll go to webringyouhome.com to register for that. Let's talk a little bit about what we're going to discuss in that class so people are aware of it. This is not a first-time home buyer seminar. This is a class to teach people how to acquire multiple properties to be able to set them up for retirement and generational wealth.
And this is not flip them and get rich quick.
No,
this is buy and hold real estate. This is how to do it right, how to rent for top dollar, how to buy in the right areas, how to get the right tenants, all these things we cover.
How to select the right type of properties.
Yep. So we
So
go through all
June
that.
18th, go to webringyouhome.com. Cleve and I will go over all the things that we've done to be able to create a really well oiled system. But we always are honest with everyone. So we want to share the mistakes that we've made along the way as well. So you won't just get all the glory, you'll get the grief along with it. We'll talk about the mistakes that we made along the way
Yep.
so that you don't repeat those same
This is it.
mistakes.
I just bought another rental. I'm buying another one next month. In fact, I just sent my tax returns over to get fast tracked on that. We're going to probably do a DSCR because you got great rates on those right now.
Yeah, DSCRs are not bad rates at all for not verifying income. I mean, they're good. I close a lot of them, a lot of self-employed loans, a lot of bank statement transactions. All we need is your last 12 months bank statements, and we can get you approved from that. Now, self-employed, you know that if you're a 1099 employee, I can use 90% of your 1099 to qualify you for income. It's
Wow.
pretty
Okay,
incredible.
that's cool.
Yeah. You know what else we're finding very popular other than reverse mortgages? People finding homes that they want to renovate. So we have a great renovation product where you may find a house, but it needs a lot of work, but you don't have enough money for your down payment and the renovation work. I can include it all in one on our renovation. And I can do conventional, FHA, or VA all the way. Then, if you're looking for new construction, what about Trinity Family Builders? They've got properties in St. Cloud, Eustis, Groveland, Mineola, Claremont, all over the
They
place.
still got those townhomes in Claremont?
Yes, they do.
They're
They're,
right on the
they're
edge.
selling
Yep.
out. Blue Ridge is selling out though. But you tell them the loaner ranger sent you, they'll pay all your closing costs for you.
Well, one thing that's
All your
happening
closing
right now, like I got the numbers on the average price, kind of flat. It's been climbing like 1% a month or
Yep.
0.5% a month. Over last year, it's up 0.3% on the average price at 476. Median price kind of flat, up 0.5% over last year, 389.9. So still, this is why I talked about. I think we're at the bottom. You know, we've had slow sales, relatively slow sales for 18 months, and since we came out of 23. And it's going to start again. And it's very hard to time exactly when.
I think we've pretty well hit the bottom as well. I think that.
But how long will it last? This is like timing the stock market. How long will it last, Bruce? That's why people need to buy now.
I think it's going to last until you see interest rates improve a little bit. Now, what I'm concerned about is what people want, because people are thinking, oh, we want the Fed to drop the Fed rate, and Trump's not getting what he wants with the Fed. The Fed's not dropping the rate like he wants. Here's the problem with that. If the Fed drops the Fed rate, you will not see mortgage rates go down.
No.
You will see mortgage rates go up. Why? Because it's going to stimulate the stock market. When the stock market's stimulated, it's going to pull energy out of the bond market and interest rates will go up. So I don't want a Fed cut. Let's just leave it alone. Let's let inflation continue to drop.
And it just shifted to where June, we didn't get a cut in May.
We didn't.
And we're not gonna get one in June, most likely. That's what the charts say.
But inflation's down to 2.4% right now,
which is what we need.
This is the lowest it's been since February of 2021.
But Liberation Day, April 2nd, all the tariffs and everything kind of upset that.
Sure it did.
Upset the bond market.
Yes,
but now,
it did.
as these deals come in and inflation goes lower, the bond market should recover. And I really think we need more of that, hearing about inflation being low, lower energy costs, lower costs at the grocery store. I just was in Walmart shopping this weekend, noticed things are down a little bit. The eggs are down. Some of the other stuff I buy is down, but it's got to get better.
We're growing more chickens.
Yeah. So
you have to grow chickens.
So, but if you need help, we're up against the break. We're coming close. Cleve Loveland, 407-352-8118, or go to cleveloveland.com. After we get back, we'll talk about some listings. We'll talk about our Leapfrog class some more. And how many properties should you own?
I can tell you that too, but it's going to depend on the individual. In the meantime, what I'd like you to do is don't go anywhere. Cleve and I will be back in 5 minutes with more of the Loveland Report and the Lone Ranger Show. You can reach me at 407-250-9144. That's 407-250-9144, or webringyouhome.com for the Lone Ranger. We'll be back in 5 minutes. Stay tuned.